Alright, well, welcome back everybody to another edition of the Forex Market Preview. My name's Jason. I'm your fearless host here at the FMP. And I want to cover this week, I'm going to tell you right now, I'm not a big fan of this market at all right now. I don't like it. Been doing a little bit of trading fairly unsuccessfully here over the last couple of weeks, but that's okay. We've talked about for quite some time now the need to dial it back, and I've been trading a lot lighter than I normally would just because we're now into the holiday time, and we're seeing some things that we normally see over this time of the year. Darren and I were actually in the office trading earlier this week, and we're just seeing some rapid price corrections for no apparent reasons. They're not around news events. They're not set up for anything. It tends to mean that the market is fairly thin, and that there are a lot of people who are taking trades in order to close out the year, to rebalance the portfolios, to exit positions, rather than making long-term strategic plays or midterm strategic plays based on what they're seeing in the market and the numbers. So what you're seeing is an end of year happening right now, or at least that's what it would appear to me as I'm looking out at the market. Now, what does that mean to you? Well, it means no different than what we've talked about for the past probably 3 months as we began to approach this period of time towards the end of the year. It means if you are going to trade, dial back your position sizing. If you're not going to trade around the holidays or around December or whatever the case may be, set those times up now so that you know when you're not going to be involved with the market and when you're not going to be engaged with it. More than likely, if you're a day trader, you're still going to be finding some very nice moves, some very nice stuff happening on the lower time frames. But we deal here with, and I deal with in my own trading, higher time frame charts, 4 hours, daily, stuff like that. And when you're dealing with that type of stuff and those types of time frames, well, now you've really got to consider, if I'm taking this trade, how long is it going to take this trade to play out? What might very well take 2 or 3 weeks for that trade to play out? Well, what's happening then? Well, now we're right into the end of the year. Now we're into December, into Christmas, we're into New Year's, and what do you think is going to happen? Well, most likely is you're going to see a fairly rambunctious back and forth market that is showing some weird corrections and some things that just don't seem to make a lot of sense as people start to rebalance those portfolios. And what you're also going to see, highly likely, is that the market's just going to stall as we head out into the end of the year. You're not going to see any directional movement. You're not going to see any type of trend continuation or any type of major corrections that happen. And the market's just going to kind of peter. Now, that doesn't always happen, but it's traditionally what one can expect. So everything that we talk about today on the FMP, I want you to kind of work through that prism. Or view from that standpoint of, hey, here's what I'm seeing and here's what may happen, but this is really just kind of a market that I don't really want to have my hands on. We're going to start today with pound Swissy. So bringing over the pound Swissy chart, you're going to see a couple of different things here. Number one is the anchor leg that I've drawn in here. And we actually have, this is technically a Gartley pattern. We have a 618 here, and then we have a retracement. This is basically, it's like a 382. Like a 50%. And so it's not really a very good Gartley pattern, and it's not one that I would trade. Sorry, guys. Not one that I would trade, but still, as you can see, a valid completion down there at the 1414. Now, that's going to complete below the 886 if I bring the 886 in here. So if I go ahead and I bring this in, call it the 886, you're going to see that it completes actually below that 886, right at that structure. Look at the double bottoms that come in here. You got the double bottoms that come in there. You now have another basically retest here, double bottom area. Now you do have this down here, and this would negates the double bottom for me. You have the initial test here. Okay, that was the initial test. Market trades sideways. We fail to close below. Market rallies back up. We come back down in. We still fail to close below right here. And then right here as we come back down, we actually do close below those initial lows. So this does not meet the qualification for me for a double bottom, but it is a valid retest here. And we have seen the market come down and back up again. So you may be in a position here where this could be something that you could buy into, especially if you're looking at the advanced pattern formation. So if you're watching the advanced pattern, you certainly have a buying opportunity here with stops below the spike low here. And if you do that, you're going to be looking for some trend continuation up into this 382. And you can see the 382 retracement comes in here at 149.46. And you can see the structure that exists right there as well if I show you the structure right in here. So there's going to be some structure that happens and some resistance that happens right at that 382. So you've got a very nice risk reward here. If you want to wait, we also have a potential cipher pattern setting up as well, and that will lead us into something like this, where the market will rally back up into a 786, and we'll be looking for a sell around 150.78. Now, some of you may look at that and say, well, I don't understand, Jason. If you think the market's going to go higher, why don't you buy it up down here? And I'm not saying that you shouldn't buy it up down here. What I'm suggesting to you is that I don't know that the market's going to go higher here. And that's the thing. When you start talking about predictive analysis, one of the hiccups that you run into is that it is predictive. Like I'm looking at this advanced pattern formation, and I'm saying based on this advanced pattern, what we should see is the market rally. And we should see a rally up into the 382 and the 618 if this thing's got a little bit of leg. And we're on 150.23s. Well, if the market advances a little bit higher than that, I can look to sell again. So in a perfect world, what we would be doing would be buying up right here. We'd be taking off initial targets here at the 382, secondary targets at the 618, and then we'd be looking to sell if the market came up into 150.78. And then we'd be riding the market all the way back down again, and we're just going to eat up every ounce of profit that we can out of this consolidation that's happening right now. Because I don't know whether the market is going to rally here, I can make the assumption that, hey, if I'm a buyer here, the market might go here. But because of my rules, because of the way I have restricted my trading, I'm not allowed to buy here based off of this advanced pattern formation that we see here. I have to wait until the market rallies up into the 786, and that's purely discipline on my part. It's purely rule-based discipline on my part. And if your rules are not as strict as mine are, then there's no reason why you shouldn't have the opportunity or shouldn't think about taking a long position here and looking for a move back up into 786, because that can definitely be a moneymaker for you if the thing plays out the way historically pattern recognition should. Now, let's look at some other stuff. Give me just a second here. I'm going to cycle through the charts with you because I had a very hard time when I was in here earlier finding something worth trading. Let's go to the pound. Here's the pound. I'm actually short the pound. I'll give you a little lesson because I do have private client group members that I showed this to earlier. We have the double top here. Then we have the break of structure, breaking structure to, hang on. Sorry, let me get the right tool out. Breaking structure. There's the lows. The lows were violated as we came down. Then the market came back up. You've got both 2618 and Kiss of Death trades here. I ended up selling right around here. But I had stops very, very tight above the spike high. I did that for a couple of reasons I won't go into now, but as it turns out, the market came up, spiked me out, and then I got this correction, showing me that the market was continuing to hold that structure and basically putting in a double top. As the market rallied back up, I ended up selling again. And now the market has kind of traded sideways, and I'm now in the money on this trade, and I'm looking for some targets around 159.72s. There is, again, all we're doing is looking at structure here. We're looking at potential areas where the market is likely to reverse. And given the fact that we're moving into a consolidating time period, I figured this would be an excellent opportunity to utilize the 2618 trade on the pound here and look for a little bit of a pop down into 159.71s. If the market was to rally higher from here, if we did this and we broke structure to the upside, what we can look for is a pullback into previous structure. Because what the market likes to do is it likes to, once structure is violated, it likes to retest. There's a perfect example of it right here. Market was violated right there. We broke down, structure was violated. Where did the market go? Right back up in to retest that level. All right, let's find another one back here. As we come down. Well, let me just find Let me see if I can find a nice one. Sometimes they're not all that clear. Yeah, here's one. A really nice one. Market has a high here. Market trades inside of that high. Back and forth. Then we violate the high right here. The high gets violated. We come back down in. Where do we come back down in to test? We drop the line in. Boom. Comes right back down into, and look at that. Look at how clean that is. Market comes right back down into test that previous level. And we'll see this happen time and time again as the market moves, but with a shelf as clear as this one, the triple top highs, the market clearly setting a line in the sand at 160.50s that's saying here and no further. If the market does end up violating that, there is a high probability chance that we're going to come back down in and retest that because there's going to be a lot of people waiting to buy up. So as you guys are watching that, that's going to be another opportunity potentially as we move towards the holidays. And again, let me just preface all of this stuff that we're talking about right now. We're viewing through the prism of, hey, we're right on top of the holidays. Let's have a look at Canada. Canada, another great example of just the trade. Once the market violates, we retest previous structure. It wins. We retest again. We win again. And it's just a great example of those shelves. When the market does break through, we like to see that retest. Euro's kind of set up the same thing. We had the double top, then we had the breakthrough. Well, now we've had violations of the highs. And so now we're back in and we're actually testing those lows again. So if you want to get really aggressive with it, you've got buying opportunities here after the market violated the highs, the initial highs. You've got retests here for buying opportunities for trend continuation. Euro Aussie. I had another one in here I wanted to look at. Yeah, Euro Aussie. Euro Aussie doing the same thing. Potential cipher pattern trade here. If I bring in my potential cipher pattern, we're looking for a 786 retracement on Euro Aussie. So in the event that you're watching this thing this week and we get a major correction to the downside, again, look for that 786. There is on the T2 trading board, Darren alerted me to something the other day talking about what they call what's being called an ace trade. It's an aggressive C entry, which is basically entering. We use them sometimes in Gartley patterns, where we find harmonic levels in two different areas, and we're gonna buy a deep retracement aggressively in hopes that we see a Gartley pattern complete. And it works. It works to some degree. We've had mixed success in testing it on different pairs. But here's the thing. With a cipher pattern, the aggressive C entry is just stupid. That's all I'm going to say about it. There's no reason to sugarcoat it. It's just a bad idea. Because all an aggressive C entry is a 127 completion. That's it. You might have an ABCD pattern there if you're lucky, but more than likely, all you've got is a 127 completion of a 127 extension that completes, and you're looking to sell every 127 extension. And I'm telling you guys, that's a losing proposition. Go do some testing on that before you start trading aggressive C entries on a cipher pattern. I guarantee you're going to get killed trading that method. So don't trust me, don't believe me. Go out and test it for yourself. But and anybody wants to submit some numbers to me that shows me that I'm wrong, I'll eat my words in the next Forex market preview. But I've just been doing this for long enough that I know you don't trade, you don't sell every 127 extension, just like you don't buy every 618 retracement. There has to be some other qualifier there that gives you some indication that the market intends to reverse. So for all of you guys who are talking like you're smarter than you are about aggressive C entries for cipher patterns, be careful the bad advice that you are spreading to less knowledgeable people. Let's see here. And that was Euro New Zealand. Euro New Zealand, same thing. I just put this line in here to illustrate resistance levels here. It tested once, twice, 3 times a lady, and now it's broken out. So what's going to happen? Highly likely to pull back into this 158 zone. Bring in our Fibonacci retracement from the last leg of the move. You're going to be looking at basically a 382 retracement. It's going to come into the 382, and there's a high likelihood that we're going to see a bounce. Where are we likely to go? Look left. Structure leaves clues. We're going to go here and potentially here. So now all you got to do is look at your risk-reward profile, depending on how you want to buy. If you're going to enter at the market at the 382 retracement, you're looking at there's your reward. Where's my risk? My stop's got to go below previous structure. So you've got basically a 1-to-1 measured move to those initial targets. You're not going to be able to take anything off at the retest here. A lot of times we'll get into a situation where the market will break out and we'll be able to actually take off the first part of our profits at a retest of these highs. So the market will pull back like this, and then we'll rally, and we'll be able to say, hey, we're going to shed some profits right there. You're not going to be able to do that on this one because you've got a wide stop here, and you want to make sure you've got at least a 1-to-1 risk profile on that trade. So in this case, you're going to have to shoot for those 159, 160s levels. That's a big move for this, and you're going to have to hold a lot of open position profit here until the market will cycle. There are other ways to do this. You can wait for the market to cycle. I'm not going to get into all the different ways that you can trade this. There are a ton of ways to enter and exit the market. And what I'm going to leave you with today is basically telling you that if that's some of the stuff that you want to learn, there are several ways that you can do that. The easiest way and the cheapest way is just to join the syndicate. And if you're not a syndicate member and this is a video that you watch every day or every week, then shame on you. You should be a part of that. It's $20 a month. It's so cheap. It's less than a cable bill. To have access to some of this stuff that we're doing in real time throughout the week. And Akil and I both manage that membership. It's a subscription on a month-to-month basis. We put out trades. We explain some of this stuff in more detail, help you guys kind of work through the processes throughout the week. A lot of stuff on psychology, a lot of stuff on different types of entry techniques, different things that you can be using, knowledge for your toolbox. So as you go out to trade, you've got a lot better handle on what you're doing and what your options are, and that really becomes the crux of it. That's the real mission behind what we do here, is empowering traders to learn the skill of technical analysis so that they can do this stuff on their own. So that you come here every week to validate what you're seeing, not to try and figure out what you're supposed to do. And that is the biggest blessing that I get, is when I get the emails from people who say, hey, I just want you to know that I've been following the Forex Market Preview for 2 years, and I've been in the syndicate, and now when I come, I never miss a week of the FMP, but now I'm validating what I'm seeing in the market. I'm looking at my charts and I'm doing my analysis, and then I'm looking at yours and making sure that everything's matching up. And that tells me that what they're doing and what we're doing here is making a difference, because it's giving them the power to make their own decisions in their own trading. So anyway, that's going to do it for this week. I don't have anything for you. We've got a lot of big, exciting things planned for next year. I have a really cool announcement for you guys. I'm going to tell you about it next week, though, and you guys will learn more about it. But let me just say, it's kind of a big deal. So I will be talking to you about that next week. And until next time, good luck and good trading. I'll talk to you soon.